Did you know that one of the greatest investors of all time believes the impending Tesla stock drop could be the worst ever? Many investors are still not thrilled with how the EV company's stock has performed in the market. To learn more about this, stay watching and tuning in. Given the recent threats of inflation, deflation, and perhaps a worldwide recession, the underwhelming performance of Tesla stocks in the current market may not come as a surprise. Bulls in Tesla are still adamant about their position and their conviction that the stock will eventually rise again. You are about to discover why this could be the worst stock drop in history for Tesla. Jeremy Grantham says the crash will be even worse than it was in 2008. British investor Robert Jeremy Golfo Grantham, also known as Jeremy Grantham, is the co-founder and chief investment strategist of the Boston-based asset management company Grantham Mayo and Van Otterloo. As of March 2015, GMO managed assets valued at over $118 billion. Though he has occasionally adopted a bullish perspective on the market, Grantham is generally considered to be a market skeptic and is maybe best described as a permanent pessimist or permabear. Jeremy Grantham's super bubble bet on U.S. stocks drew attention from the market even in the early part of the year. The world needs to get ready for a future of inflation, slower growth, and labor shortages, he warned, delivering an even more dire and urgent message. He claimed that the Goldilocks period of the previous 25 years was coming to an end. In an interview with Bloomberg Front Row, the well-known value investor stated, "There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we're beginning to hit some of those boundaries." Grantham went on to argue that severe droughts, intense floods, and rising temperatures are all consequences of climate change, and none of them are conducive to farming. So we're going to live in a world of bottlenecks and shortages and price spikes everywhere, he stated. Midway through January, Grantham warned that a crash is coming and detailed what he believes to be the fourth super bubble in American history. He also suggested selling all U.S. stocks. He warned that no amount of action by the Federal Reserve could stop the S&P 500 from falling by over 50%. According to him, the last century's expansion in the quest for ever higher living standards has left behind depleted soils, contaminated ecosystems, and a shifting climate. As a result, human reproductivity is slowing down, biodiversity is under danger, and wildlife is disappearing. "We have merely surpassed the planet's long-term ability to cope with us," stated Grantham, the head of a $1.5 billion environmental protection fund. "Nature is beginning to fail, and in the end, if we don't fix that, we begin to fail as well." Grantham predicted in February that there might be a major bubble crash under progress. In fact, he thinks that the mega bubble, which has been accumulating for over 10 years, might be about to explode. Grantham, a co-founder of GMO, is renowned for his accurate predictions of the dot-com bubble in the late 1990s, the asset price bubble in Japan in the 1980s, and even the housing bubble in the United States that preceded the 2008 financial crisis. Having stated that, he is now announcing the impending collapse of asset values, focusing initially on speculative tech equities. Do you think that the mega bubble is real, as Grantham does? Please share your thoughts in the space provided for comments below. The S&P saw a 25% increase last year, and many of the most speculative stocks of 2020 were already declining, he stated. That happens extremely infrequently. It occurred in 1929, again prior to the major downturn in 1972, and again prior to the technological collapse in 2000. According to Grantham, several of the most speculative equities have already lost at least half of their value since their peak, suggesting that the process of a mega bubble popping appears to be well on. Furthermore, Grantham cautions that two factors that have been driving up stock valuations for decades will now be working against them. One is increased inflation, and the other is a potential decline in the record proportion of economic output going to corporate profits, which he believes could have an impact on share prices. Thus, as mortgage rates rise, Grantham is cautioning that the United States may be on the verge of a housing catastrophe, with potentially disastrous consequences for the economy. His forecast regarding the S&P 500, which has turned out to be astute given that the index is currently down around 15% year to date, lends credence to this. In an attempt to combat unprecedented levels of inflation, the Federal Reserve has been raising interest rates, which has hurt stocks, especially in the previously high-flying tech industry. The renowned investor makes the case that the U.S. economy can withstand large declines in the stock market, citing the relatively mild recession that followed the dot-com bubble's explosion in tech stocks. However, when it comes to a housing crisis, it is unlikely that the economy will escape unharmed. In keeping with his conviction, Grantham stated at the start of September that the huge bubble in brewing has not burst yet. It is not good news for Tesla or other companies if this regrettably comes to pass. As a matter of fact, a few days ago, Tesla's shares fell along with most of the market. The stock of the top EV business dropped 3.6%. The tech-heavy Nasdaq Composite Index was down 3.7% as well. However, some experts think that at that point in the session, the fear of heightened competition was at least partially to blame. However, traders have bought the stock up to a price-to-earnings ratio of more than 100 in part because they anticipate Tesla will increase vehicle production from its 2 new factories in Texas and Germany. Despite these promising growth prospects, investors anticipate the EV leader to continue growing rapidly for many more years, which is why its forward P/E ratio is still concerning. For the foreseeable future, at least, the business anticipates a 50% yearly increase in EV production. Furthermore, based on observations from the Fremont facility and Giga Texas, global equities research analyst Trip Chaudhry predicted that Tesla is expected to have a super record quarter this year. According to Chaudhry, Tesla is expected to deliver over 500,000 units in the last quarter of this year. Interestingly, this prediction stems from his personal observations made when visiting Tesla's Fremont factory in California. His forecast of over 500,000 units delivered was in line with remarks made by Canaccord Genuity analyst George Gianarikas following his tour of the Fremont facility. Chaudhry noted the unmatched motivation of Tesla personnel in the automotive business, citing their unwavering dedication to their profession. He also mentioned that Tesla workers worked over the Labor Day weekend. Gianarikas was similarly enthralled with the worker spirits and the chaotic symphony of the plant. The Fremont factory's production schedule has become at least 10% more efficient compared to Q2 2022, the Tesla expert further noted. He also mentioned the notable increase in Model S Plaid deliveries and production. Even with this unexpectedly optimistic, but very welcome prognosis, the top electric vehicle manufacturer will surely still be impacted when the proverbial super bubble bursts. According to Grantham, there are uncanny similarities between the current U.S. market and the dot-com bubble and fall. He cautions that, similar to 2000, not just speculative equities are severely overvalued and will decline. I think it would be unlikely that the market would not come down by 50% from its peak, the broad market, the S&P, and it would be unusual if the specs did not do worse than that, he stated. Having said that, he suggests that investors search some developing or emerging markets for discounted stock values. Some of the cheaper developed countries would be very much a better idea than a massive holding of U.S. equities, according to him. This can always turn into something of a financial crisis, so if you must purchase U.S. equities, you should own high-quality stocks that are in solid financial shape. They'd frequently do, he continued to caution. Make sure you don't buy expensive markets, expensive stocks. However, as was already said, Grantham has occasionally adopted an optimistic perspective on the market and is generally considered to be a market skeptic. He could be described as a permanent pessimist or permabear. That does not, however, imply that his forecasts are false. After all, he was correct multiple times. And whatever you do, get rid of this fear of missing out, this terrible lust to participate in profit-making that comes along at the end of every one of the great bubbles, Jeremy Grantham, the famed investor, adds. Check out our other videos on our channel for more information about Tesla stocks.